This is Rob from BuySide Global. I'm really excited to share some of the new research work we did almost a couple of years. We came up with a strategy a few months back, and then we released it a couple of months back to our audience. But today we are sharing to the entire NinjaTrader audience. Yeah, this is purely based on order flow, and we are going to go through not only how it works, what are the ways you can learn, what are the steps you can look at, how to trade it, and then some examples, everything. But before that, let's please understand the risk involved in trading. Trading is not for everyone. Any forms of trading involves risk. So please understand the risks involved. Also, this presentation is purely for educational purpose only. Also, past results or past any kind of information is not necessarily indicative of any future results. For understanding the full disclosure, all the risks involved in trading, please visit buysaglobal.com/disclaimer. Please understand the risk involved before you start trading. Before we get started, I wanted to thank you everybody here taking your time and then allocating for next 45 minutes. Next 45 minutes, I'll promise you one of the we wanted to bring you the best education to help your trading journey as much as possible. For being here as a thank you, we want to give you one of our other order flow indicator full free access for 6 months. You don't there is no payment required, there is no credit card required. You can go to buysideglobal.com/free and get those access here. You can copy the link, but you can go through those things later. But just in case, keep the link. But let's get started. Um, Trading is one of the complex career, I would say, because it's not like you learn one thing and then you can become successful, right? Like any other career, it focus on one niche, one thing, one skill. You can practice those things. But when it comes to trading, we have to learn so many things in simple, right? If you want to trade trading, you need to know which direction you want to trade, and then once you determine the direction, where exactly you enter the direction. If you want to go for long, you can't enter anywhere. You need to know the exact price level and exact timing. And also, you need to know where you can have a stop loss. If you are wrong, where you can exit to minimize or have your risk management better. And then even if you are in a good trade, you need to know when to exit. What is your target level? Even if you have a good trade, good stop loss, know your ideal target, if you don't know how to manage your trade while the trade is price is moving on, still you're gonna fail. And then risk management. When you say risk management, that's the most important skill out of all, because we in form of trading is riskier. How you manage your risk in the initial trade entry until the exit, the whole journey is very, very important. Above all, emotional intelligence. This is something, anything, other things you can learn easily, not easily, I would say. It will take some time to learn, but emotional intelligence is the one. It takes really, really long time. It comes over, this is the only thing, it comes after you fail a lot of times, gaining the knowledge, gaining the exposure, gaining the experience, know what to expect, what not to expect, everything there. But my point is, to succeed in trading, you got to understand a lot of things. It's like opening the key lever. If not one of them, you don't know how to, still you're going to struggle. You're going to get frustrated. You're not going to have a smooth trading experience. But I wish I can teach everything, but unfortunately, we have only for a short period of time. I'm going to focus on three critical elements, which is the trade entry, stop loss, and target level. 90% of the education today I'm going to give you is going to focus on the entry level, but I'm going to help you to learn the best possible stop loss level, and then the same thing for target level as well. Okay. When it comes to the strategy, out of the strategy I'm talking about, Some strategies are really powerful, but very, very hard to execute, hard to learn, hard to put together. But some of them are simple. Simple ones are really not the great ones. So that's why this particular strategy that I'm going to share is something we feel from our experience, from our customers' experience, both powerful. At the same time, when I say simple, it's not like we can get um, like within a day. Everything requires practice, everything requires learning, everything requires continuous learning. But this one, you can much easier to learn, but still you need to put the hard work in there. But let's here, I'm going to teach you three things again: trade entry, the stop loss, and exit. We call that all together new order block. Why? You will know because we are going to leverage only one critical element, which is order flow. When it comes to order flow, I'm going to focus on level 2 order flow. We will see that in a second. But why do we call it trade entry hack? In terms of how did we stumble upon this? Because I can right away tell you how it works, what it is, how to find. But if you don't know the story about how we were able to stumble upon the idea, what drove us here, what are the failures we had to get to this point, then you'll be able to understand much better. That's why I want to give you a little bit of quick rundown of our history in terms of we personally or for years we stayed supply and demand in terms of I'm pretty sure how many of you are supply and demand traders here? How many of you trade based on supply and demand? This doesn't matter swing trading or like investments or like day trading. How many of you trades are supply and demand? This is something been there for so many years. This is not something new, but it's really, really powerful. So if you are like me, you know what is supply and demand. Any price level, when the price rejected at least twice, we call that as supply, where the sellers are stepping in. Any price level where price is bouncing and then go higher, we call that as demand. So that one particular trade we always trade is the breakouts. Breakout, as definition goes, we try to find a place the price getting consolidated, where price gets stuck in a level between the supply and a demand. Eventually it breaks out and wait for a retest, and then we take a trade. This is the bread and butter of all the supply and demand traders. I tried this for so many years. It works sometimes, it doesn't work sometimes. We don't know why, we don't know what's happening at that point, but it's all about the numbers game, right? So we know losing some trades is part of trading, and then we go on. But we always had each about what is really happening when it fails. When most of the time it's in textbook, right? We can see stronger supply. Even here it rejected 3 times, but it have a clear breakout, unclear retest, and the price is still going up. When we take a trade, what happens next? Still, it can fail, it can reverse back down. And then like something is happening here which we're not able to see in the regular charting. That's when we wanted to find out what are the places we can look, what are the clues we can look. That's when we really stumbled upon, um, not stumbled upon, we started researching throughout order flow, what is really happening at that level. What are the things we can see to at least to know why it's happening. So one thing you can notice is that institutional traders, you cannot find any institutional traders they do not trade without out of level 2 order flow. They always look at the tape, always look at the order flow. Only we retail traders look at only historical charting, historical price movements and trade. I'm not sure the screenshot that of what I have here is from the series called Industry. Is if you are a trader, if you are you should look at the series. That's 99% of the series is like a drama, but that's 1% of learning you can from the series is there are multiple characters where some of them are forex traders, some of them are like equity traders. This particular guy here is a Rishi, is a market maker. He can, a lot of scenes. They make the decisions based on tape. They talk about tape a lot. But what is really tape? What is really the tape that institutions always look at? The tape is nothing but the current order flow, right? So there are multiple screens you can take a look. The one on the extreme right is called time and sales. Time and sales is nothing but the as and when the order got executed in the exchange, It's going to give you the exact time of the order got executed, what price got executed, what quantity got executed. Is it a buy or a sell? Everything is going to tell you, and color coded as well. That's what the tape is. In addition to that, there are orders goes to exchange that didn't get executed. That means it's still pending, because those are limit orders that you can see through either for the super dom or level 2, everything put together the order flow. But today we are going to focus purely based on pending order flow. I'm going to show you a few things. It'll be really amazing to see what are the insights we can find from that particular pending limit orders. The reason is that, think about it, if something already happened is showing up in the time and sales, it's already happened, but this is pending. That is pending for a reason. There's a level, they pick the levels, they stay on top of together. How it helps, let's see. So to compare, um, this is what your chart look like, right? So in terms of the price and movements, historical charting, you are looking at the RSIs, the MACDs and crossovers, whatever the clouds, whatever it is, we are making the decisions based on the historical pricing, price movements, everything. But that's the past. Past is past. You need to look at the present. What's happening right now in the exchange? Who is really having the control? The buyers or sellers? Are there more buyers coming in or more sellers coming in? If they are opposite, sometimes sudden reversal happens. We can see those things have in real time on the level 2 order flow, but the order block starts coming in. To give a little bit of information for anybody who are very new to order flow, most of you, I'm pretty sure you guys have level 2 data. You might not have a you might not have level 1, level 2, or you might have only level 1. What is level 1 and level 2 data? If you go to SuperDom, all you can find is the current price and the best bid and best ask. That's it. You do not find all the level 2 in-depth market order flow. You're just trading based on the historical pricing. But if you have a level 2 subscription of market data, not only is going to give you the historical price movements, it's going to show you how the current order book look like, how many orders pending in the exchange, how many are um, like sell orders, how many are like pending buy orders. Here we call it as like ask and bids. Whatever you see on the top here is all ask. You can see the quantities there. Every quantity represents number of contracts are willing. In this case, there are 138 contracts ready to sell at this price. They're pending. That means if price reach there, it will be executed. Until that time, it won't be executed. So that means we can see the whole order block, order book, how it's stacked only if you have level 2. Okay, but what caused these numbers? What are those things? Let's look at a typical chart. Anytime you place a trade, let's say you enter your market order, getting into a trade. When you get into a trade, you typically should have the stop loss be below. Let's say you are going long, you have stop loss below your entry price and targets above your entry price. So those are the limit orders sitting in the exchange. It's not going to execute. In this case, I have only one target here, another target right here. I sent to the exchange already. That means exchange is not only getting my limit orders, is getting your limit orders, getting limit orders from every single traders around the world who are trading at the same time. They are consolidating everything, giving you a snapshot, just like here. That's why you can see everybody where what levels or how many contracts are ready to sell. You can really see the numbers at certain levels are higher than the lower levels. That creates a lot of selling pressure or buying pressure. That's what we're going to use today. Okay, that's what we're going to use. So, but you need to understand both, everything together, order flow. You need to know how to read order flow in real time with level 2. That's what really happening at present. So that's what the most important point I want to take away from the here. But most important point, if level 2 is order flow is the answer, is it possible to know if there are any think about it. When the price moves, really moves when a lot of buyers coming in, a lot of buy orders get executed, right? So same way, can I see if large series of buy orders coming in? Can I see as well as a lot of sellers coming into the exchange? That's only possible if we look through the level 2, right? So why? If there are large order blocks coming in, let's say all buy orders coming in, it's going to create a pressure, buying pressure or selling pressure. Both. Anytime there's imbalance, when I say imbalance, there are more buyers than sellers. It's going to create a pressure to push the price higher. If there are more sell orders coming in than the buy orders coming in, it's going to create a sell pressure. It's going to push the prices down. Yeah, in the way that every imbalance causes a price movement. That's what we're looking for. Why do we need to know that? Because if we see the momentum, the balance switches on the one side, if we start seeing the pressure, you can enter the trade in the same direction at the same time, and then we can stay in the trade, not only enter the trade. That's a critical element. Not only enter the trade, you can also stay in the trade as long as the pressure is on the one side, and then exit, it starts shifting. Okay, are you guys with me so far? Type yes. So far it makes sense for you why you need to look at order flow. But at the same time, if you have any questions, please type it in the chat. I'll get to it when I end of the webinar. If there's something important, I can answer right away. But one important thing is that we wanted to know uh, what we can look at the order flow to find those kind of pushes, those kind of movements, any kind of what is the best way to use order flow level 2 to find the um, better trade entry opportunities. So that's when we started analyzing order flow, purely level 2 order flow. We downloaded a lot of historical data. We did a lot of back testing, a lot of research. This is not something new because I came from investment banking bank. I worked for like 20 years across largest investment banks, but I was not a trader. Those banks, I was a developer behind the screen. I was focused on the data analytics for investment banking. But if somebody can do a research on the data, I have such experience. This time, only difference is I'm not doing it for the investment banks. I'm doing it for myself. That's when it started. So download a lot of data, try to find the hidden patterns. What are the anytime we see orders coming in, what are the patterns look like? What is it having impact on the price movements? We want to find all the patterns. To find that, the level 2 screens are super dumb. Whatever the other level 2 screen that we have is impossible to analyze because they keep on changing very, very fast. We need a better way to analyze to find the strongest blocks and reduce the noises. That is the initial goal. That's why we introduced a product called BSG liquidity zones. It takes all the market depth data. It won't plot every single market depth because that's for us it's a meaningless. We wanted to find the impactful order flow that can either hold the price or push the price or looking for the breakout, those kind of strongest order flow. That's why if you go back, I said we need to identify the largest persistent concentrated liquidity blocks that really matters. We don't want it to have, yeah, it's just paint all the numbers in here into a market depth chart that doesn't have any meaning at all. For us, we want to see some of the important order flow blocks only. So now when we started plotting, we started really patterns and then the price movements. To give an example, remember that I just showed you a few minutes ago the same chart how I used to trade for years, where when the price gets consolidated, we wait for the breakout, we wait for the retest, and then when the retest happen, we take the long trade. But sometimes it's failed. Remember that? But now same chart, if you look at the level 2, what's causing this resistance? What is causing this the false breakout? Here is same thing from liquidity zones is nothing but we are taking the important liquidity zones from the level 2 data, putting it here. What do you see here? You can see the reason not only for the reason why the price got could not go further. Price could not go further. Price could not go further. Even still, there's still a lot of buying pressure. Try to go through that. The buying pressure, by the time it goes to all the levels, it got exhausted, and then buyers gave up. Sellers was able to hold this level very, very strong. We can see that really, really well behind from the level 2 order flow. There's a lot of pending orders sitting there getting more and more buyers coming. They keep on absorbing, keep on absorbing, keep on absorbing. There are more buyers coming in. They're able to fulfill. They're putting equal sell orders. What happens next? Not only they're able to hold the level, they're able to push the level because the selling pressure. You can see the selling pressure was more here compared to the buyers. So you can see everything. So it started making sense for us. That means we don't with the if we see a consolidation, we don't have to just draw the line based on the swings. We can look at the level 2 and find out the real reason behind why the price was held, why the price was false breakouts. So that was the first breakthrough for us. Then our next challenge is, if we can find the reasons for the false breakouts and price barriers or those things, is it possible to find the trade empty opportunities? Immediately we can see those kind of blocks. If they see a block, how does the price impact happens? Big or small? For us, new order blocks move. That's what we wanted to see. We wanted to see every single opportunity where we can take. That's when we did research in terms of every order block, consistent order blocks, we our algorithm mainly focused on removing the noises. Removing the noises. When I say remove the noises, we wanted to find out the order blocks that really pushing the prices in one direction with a ratio of the quantity of the block versus the price of those things as well. And also, it's a combination of, we call that as like a combination of both together came together, helped us to find the setup, the level 2 order block plus the price action. We call that as new order block setup. Let me give you a very quick rundown. I know I'm rushing through fast. Apologies for me if anyone think like I'm a little bit going fast, because I have only 40 minutes. I think already going through. So if you see the level 2 order block coming in, if the order blocks, you can see the level 2 starts somewhere ending at the price. We don't want to see that. We want to see when the new order block comes in, exactly where the price there, and then price starts moving. In this case, look at where this order blocks is touching the price, and then when you see the sell order block comes in, price is going down. When you can see the buy order block comes in, it touching the price is going up. This is what we want to see. We want to see this. The order block should start, the starting point of the order block should touch the price, whereas here the starting point of the order block is very far away. I will give you some examples. So in general, liquidity zone should start printing from the bar, touching the bar. The price should have the impact. So let me show you some examples. In this case, you can see there's a liquidity zone starting from here on the bar, starting from the price. This is a good example. Another example of, you can see the sell liquidity zone, which is the red and purple, starting from the bar, touching the bar, and then price is going down. And then another example, you can see the liquidity zones started to print, touching the bar. Okay, it's starting point is a critical element. Okay, another example, the liquidity zones started to print here. What is starting point is right here. I'll show you some bad examples as well to show you some what is not. Look at here. This liquidity zone is started printing right here. It's not even touching the price. I mean the bar. Look at it started here. So those two are not the new order block we're talking about. The order block we're talking about, it should start, the starting point of the block should start from the price, touching the particular price bars. Even here, the starting point is away from the bars. So this is not. It has to start just like this, start from here. So again, we see that it's so liquidity zone printing here. Where is the starting point? Is far away from the price. You can see multiple blocks here. Everything starting point of the blocks were is not even close to the price. So that's why one thing I want to take away is that we are looking for the liquidity zone block. Starting point of the block should be really, really touching it or very close to the price. Okay, so let me show you some examples here. So here I have a chart on the MES chart. We have the liquidity zones indicator turned on with the level 2 data flowing through. It's analyzing in real time. I want you to identify what are the new order block we're talking about. Okay, so first look at it. This zone is starting point is here, is ending here, is not. Starting point is here, starting point is here, starting point is here. But I want to look at these ones. So look at this one starting on the price. This is what we're talking about. So anytime you see price there, even the price going up, you can see it's the starting point is here, starting point is here, starting point. These are all not new order blocks. We're talking about new order blocks starting from the current price, something like this, something like this. So even this one is we call that liquidity sweep. Why? Price broken through and then rejected and come back is re-establishing the liquidity zone. So liquidity sweeps is in-depth topic I can talk about for hours. How beautiful to learn those things, how to leverage those things. For today's purpose, I will focus on only new order block. Again, sweeps. Again, you can this is a simplest way to identify. Let me show you some more examples as well. So here, if you look at the chart, the prices are here. All the blocks, starting point is here. All the liquidity zones are started somewhere. So first example is, you can see this liquidity zone started printing here. Okay, that's one first opportunity. And the second, look at this one. When the price came back down on the bounce, you can see this liquidity zone started printing right here. Anytime the liquidity zone started printing, touching the bar, that's what we call it as new order block opportunity to enter the trade. So this is when you see anytime the liquidity zone started printing from the bar, that's a trade entry opportunity. Okay, so I told you I'm going to also talk about the stop loss and the target. If you can see here, I said you should enter the trade here because you see the liquidity zone starting here. But why I exited right here? Why? Because this is a green liquidity zone for the strongest buy orders. Moment, even you can see there is one more buy order coming into level through, and then you can start seeing the sell orders coming in. Moment we see sell orders, if you are already in the long trade, that's when you should really exit. That means opposite pressure is shifting the momentum in terms of the shifting the momentum from highest buying pressure to the highest selling pressure. It's switching. That means if you enter the trade here, you got to exit right here. But one other fascinating point about here is the also the stop loss. Why? If you're entering the trade, I want you to see in terms of where you should keep your stop. You need to keep your stop below this liquidity zone. Why? Because this is what the strongest buyers are having the pending orders. Think like you need to hide your stop behind their limit orders. That means if prices need to get through, it need to get through, switch the liquidity, and then can go up. Liquidity zones can show you clearly the liquidity sweeps uh, in terms of those things. We'll talk about that later. But for now, I want you to, second point is stop loss. Keep your stop loss couple of ticks below. And then we talked about the exit. If you are long trade based on the buy liquidity zone, you should exit on the sell liquidity zone. Third important point. Let's say if you, in this case, okay, let's say right here, there's a new order block here, buy order block. You can see not only here, there's a new order block here, new order block here, new order block. That means think like it's a thrust. From here, price moved. There's a new thrust, price moved, new thrust, price moved, new thrust, price moved. But the whole time, you can see there are no new sellers coming in, meaning there are no new sellers starting from here. That means you can start from here. Let me go back. Start from here. You can see only the buy order starts coming in. All the sell orders are ending here. There is nothing started printing. If you can see here, the whole time, when is the selling pressure coming in? You see this right here? This is where the sell orders start printing from the price. And then you can see the momentum completely shifted. That means if you are able to enter here using this liquidity block, new order block, you should be staying in the trade as long as the pressure is shifted. That means all this time there are no sellers coming in. First time I can see it right here and right here. That means it should be staying. And then when talk about stop loss, if you have the initial stop loss here, you can keep your stop losses trailing. Look at this liquidity sweeps. Remember I told you don't keep a stop loss very close, keep couple of ticks. Why? Liquidity sweeps. It always liquidity stops hunt it is real. Stops hunt is really real. These are the examples we can talk about in terms of stops hunting. So you can trail your stops. Initial stop here, stop, move your 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 stop. As soon as you can see the opposite side of the order flow comes in, you should really exit because momentum starts shifting. So this is how it look like on a trending, but I also want to show you how it look like in the choppy session as well. Okay, so let's look at again. Now, since you enter this direction, you can start seeing opposite direction. Now you can, why did you exit here instead of later? Because market closed. I'm in Chicago. It's a 3 p.m. market close. That's why we wanted to close there. Okay. So let's look at this is another example of, look at here. The price is like the whole time its market is whole morning is choppy. But I want you to think like anytime there's a choppiness, market is going ping pong in the opposite direction. What do I mean by that? Think take a look here. This is a new order block, right? But where does this opposite happens? You can see the seller starts coming in this level, opposite level. So let me show you this first here. When the market open, first order block, new order blocks here, you stay in the trade. Moment you see opposite selling pressure, you can exit. So that's why this is the strategy you can use using level 2 order flow, both the entry as well as the exit, also the stop loss. All three things you can leverage those new order blocks. Okay, so another again, that's another new order block. You why did we exit here? Look at that one, new sell order block coming in. So another example there, we entered the chart, and then like you can see, why did we exit? Opposite, the buyers coming in. So same thing. This again, if you miss this one, you can see the next one. And then the whole time the market was choppy, but moment it break out, it came back, retest to the same place, and then you can see the sell or the sell new blocks coming in, and then the market is closed right there. Okay, so let's look at a couple more examples as well. Another, because the more and more I show, you can practice on the choppiest session, it get easier to trade on the trending session, because when it comes to trending session, you will see, okay, in this session I have both the choppiest session first off, and the remaining was trending down. But if you notice that on the trending down, only the new order blocks are forming on the sell side. Do you see that? There are no buyers coming. You can see something came up that's made a push, but other than that, everything was coming down. So again, sell order block. Why did we exit here? There's a new order block right here. New order block for the buy. Why did we exit here? There's a sell order block right there. So again, sell order block. Why did we exit here? Now we saw the new buy order block. And then from here, you can see the sell order block. Since then, there are no buy order block, all sell order blocks. You can see my mouse, isn't it? You can see my mouse movements as well, where I'm pointing it out. Okay, so again, this opposite side. Initial morning we had the move, and then it got consolidated and choppiness. Same thing. You can see when the market moved, the new order blocks, the zone started printing right from the bar. Not one, two, three times, and then from here to here, I want you to notice something. The new order blocks for the buy, new order for the buy, but to the whole time, sell orders, there are no new red lines started printing. There are new. When does it start printing? Right here. That's when it's the opposite side of the momentum happens. Again, you can see the new order block. When did we exit? That new sell order blocks comes in. Think like it's a ping pong. Every time you see the buying pressure, it'll create a green liquidity zone for the strongest bits, and then it'll create the red liquidity zone for the strongest sells. How are we doing with the time? I had 10 minutes more. All right, I'm going to rush a little bit through because I want to show something from this week as well, because that's more important what's happening today, isn't it? So this is from this week, June 2nd. You can see when the market started opening, new order block, new order block, new order block, new order block. That means if you're already in the long trade, if you see the new order blocks for the buys, you're going to stay in the trade. When do you exit? The opposite side of the selling pressure starts coming in, right? So, and then again, market was consolidated. There was a this is both liquidity sweep and the new order block. I know liquidity sweep I didn't talk about much, but I wish I have time to talk about that more. Again, same thing. But anytime the strongest sell was broken through and the new buyers coming in, you can see the red becomes green. Again, new order blocks, new order blocks. The whole time here, there are no selling pressure, and then we exit when the market closed. This is June 2nd. And then June 3rd, Tuesday, same thing. You can see initial almost like 45 minutes when the market open, you can see the ping pong. It means new buy orders, large buy orders, large sell orders, large buy orders again, large sell orders, large buy orders. That's what creates a consolidation. That's what creates choppiness. That means there is a boundary that back and forth like a ping pong, the order blocks coming in the opposite side, holding the price. But I want you to watch this area. 40 minutes it was struggling and then starts coming in new order buy orders, new buy orders, new buy order blocks. Level 2, you can see the order blocks coming in like continuously. What happened? You can see the whole move, the new order blocks comes one after the other, continuously. There are no new sellers. So that's why it's very, very important for you to always look at the order blocks, look at the level 2, look at what's happening in real time in the order flow instead of just focusing on the historical price movements as well. This is June 3rd. This is I think this Tuesday. Okay, so this is ES, but I also want to show you the NQ. NQ have less liquidity compared to ES, but still the same rule applies no matter what. So same thing in terms of, you can see market was consolidating, new order blocks, but even if you look at the whole movement, all the liquid zones are started somewhere, ending here, 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 started somewhere, ending here. First time you can see started on the price. That's when we exit. The During the whole time we need to trail your stops, put your stops behind the liquidity zones. Okay, all right. So that the reason I wanted to point to multiple is because even if you miss this, you have next opportunities, and then the next opportunities on the same direction. Okay. This is June 4th, I think yesterday. This is from yesterday's chart. Again, same rule applies. We are looking for the liquidity zones starting touching the price. So you can tell from here, new order blocks came in, there are no sell order blocks starting. It's all ending. It's all ending. When it's here, right here, we can see it started creating, and then from there onwards, we started seeing more and more selling pressures, right? So more and more selling pressures, and then when the market closed. Okay, so I think I have a few minutes. Let me. So the point is like, this is the biggest takeaway I want to take away is that I know you guys are trading based on historical pricing. Level 2 order flow is going to give you much more information what's happening right now. You don't have to take it from me in terms of what I say. In terms of our customers' testimonials can say how it helps to read the chart, be able to um, find the order blocks level 2 much better, to see those information, how we can leverage those information in real time, those things as well. So again, these are testimonials from the customers who have been using our product. So that's why I did not have to say, because whatever I say, it doesn't matter from what the customers or other traders using our strategy and blocks. But I tried to squeeze in the 2 hour of training into 30 minutes of new order block. But if you look at that particular liquidity zones, there is more than just new order block. We have 7 different strategies: breakout on liquidity swap, breakout on retest on liquidity setup levels, trend pullback and liquidity sweep setup. While choppy session, we call it as edge to edge bounce and back and forth, and then market makers hunt stops. This is something advanced, but you can learn those market maker hunt stops as well after like a couple of months into your initial trading. Okay, and also multi instruments confluence. This is very, very important, and also helps you to look at across as well. So again, the point is, I trying to teach you the concise way of like new order block, but we have total 7 strategies that you can use the liquidity zones. The best way to trade is always use level 2. Okay, not necessarily you don't have to use our product. For me, the biggest takeaway for use level 2. That's going to give you the current order flow in real time, the buying pressure, selling pressure. If you are able to look properly, it can help you. With our liquidity zones, we try to simplify it so that you can learn from there. If you want to improve the confidence, always use level 2. these liquidity zones. We try to make it in simple ways to not only it's when we get a liquidity zones product from us, not only you get the product, you get the the course, the learning, the materials, so that there's no product is good enough if you don't know the knowledge, don't have the knowledge how to use it. But remember, this product does not work if you don't have level 2 market data feed. Market data feed is required. So for this particular presentation, we wanted to give you the current price is 695, but we wanted to give you the trading course as well. Why? If you don't have the knowledge how to use the product, there's no use. That's why the course is important. Let's say you have the course, you have the product, but you need a trading examples, you need live recordings, you need the trade reviews, so that you can record how they are able to trade. Can I see in real time how it's being traded? I want to see the recordings. And also, you have the course, you have the recordings, you have the examples, you have the product, but still you have some questions. You can always reach us as a Discord channel in terms of to get ask questions, take a screenshot, what I'm doing wrong, what I'm seeing it right. Okay, always ask us questions. So put together, it's like almost like 1700 value, but we are going to give it to you today. Use the discount code Ninja and then buysideglobal.com/NT8. Pull out your phone, take a screenshot, because you have the link where you can get this bundle and also the discount code. Otherwise, you'll have the $1,700 price. You have the discount code as well. But before a few minutes, I wanted to give special bonus for the customers who buy today, the first 20 customers, because there is one more product which we had for almost like 6 years now. We want to give the free 90-day access. What is it? That is one of our um, uh, the best momentum and then the price action indicator, which helps you find the order flow based momentum. It hides the pullbacks, hides the volatility, gives you the direction of the price movements. The way you can see when it is blue, even the pullbacks are strong pullbacks, volatility, it's help you to stay in the direction as well. Anytime you see it says indecisive, anytime you see a red, it's a like bearish market. So we want to give you the first 20 customers who buy today the 90-day free access of our liquidity zones. That is like color coding the bars based on the momentum, based on the price action, to help you to stay in the trade longer. Most of the time, you exit a good trade because of strong pullback, emotional stress. You exit the day and then, oh my God, I should have stayed in the trade, because you're looking at the price movements getting frustration. But that's why we want to create a color coded stay in the trade much longer. Again, now with this, now it's almost like a $2,000 value. We have liquidity zones product, the complete course of liquidity trading, and then all the trade examples, live recordings and trade reviews, day reviews, and also the community access of like other people you can ask questions. We can also answer you as well, and also 90 days free access of order flow zones with no additional cost. So put together, again, buysideglobal.com/NT8, use the code NinjaTrader, and also you will get the price of 695. If you don't have the discount code, it'll be goes back to $2,000. Let me see if you have any questions. So one of your recent videos, I saw you use BLZ. Okay, so I have a few minutes. I'll show you what it is. Okay, I'm going to pull up our current chart for that. Okay, this is our current chart from today. The question was, um, what is this BLZ? BLZ is like, you can, if you want to see more liquidity or less liquidity, you can filter it out in terms of, I want all the zones or like less zones, only stronger zones. You can slide it. You can be able to filter it out. Okay, so that's why the BLZ is for. But most of the time, put it in 0, you're fine. But this is, by the way, this is from today. You can see from the morning, new order blocks right here. And then from here, you can see the sell. There are no green lines right here. First opportunity for the long, second opportunity for the long. Again, you can see the whole time there are no selling blocks. Okay, so I think I'm on time perfectly. So I think I answered everything, Chris. I'm going to paste the offer right on the chat, so that anyway, pull out your phone, take a screenshot so that you have the link as well as you have the discount code. so that you can get the bundle for today, which includes the out of flow zones indicator. Thank you so much for everyone for joining us today. Thank you, Chris.
Thanks again, Prab, for taking the time to share with us today. Everyone in attendance will receive an on-demand recording of today's event, so keep an eye out for that email. If you enjoyed today's session, we hope you'll join us for future webinars. Follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. We would like to remind you that the information provided in this was that of BuySide Global and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day. We hope to see you in future webinars. Happy trading from all of us at NinjaTrader Ecosystem.